Hello friends, welcome to our channel Easyshots of Learning. In this video, we will discuss about ledger posting in non-integrated accounting system, which is also known as cost control accounts. When we generalize the transactions or do ledger posting, the rules are always same. Debit what comes in, credit what goes out, debit all expenses and losses, credit all incomes and profits. With the help of these rules, we do ledger posting in this accounting system. So first we take accounts, then we take one question so that you can understand the topic clearly. So friends, if you have not yet subscribed my channel, please subscribe my channel, and if you have any query related to this topic, please write me in the comment box. When we take all the transactions related to material, we do the ledger posting in store ledger control account. When the material is increased in the store, we debit the store ledger control account, and when the material is transferred or decreased in the store, we credit the store ledger control account. So in this example, we have to prepare store ledger control account for all those transactions that happen in the month of January. Our first transaction is material purchased amounted to 50,000. So when the material is purchased, it increased in the store. So we debit the store ledger control account, and the material is purchased in the cash, and in place of cash, because it is an asset, we use general ledger adjustment account. So our ledger posting on the debit side is to general ledger adjustment account amounted to 50,000. Now in our second transaction, material is returned to the supplier due to damaged condition or not up to the mark. Now when the material is returned from the store, we credit the store ledger control account, and when the material is returned to the supplier by cash or creditors, and in place of cash or creditors we use general ledger adjustment account amounted to 6,000. Our next transaction is direct material is issued to production. Now when we are talking about direct material which is directly used in production process, in place of production department we use WIP ledger control account, and when the material is transferred, we credit the store ledger control account, and where the material is transferred, which is WIP ledger control account amounted to 30,000. Now in next transaction, indirect material is issued to production, and in case of indirect material issued to production, we use factory. So by factory overhead control account in case of indirect material issued to factory. In case of indirect material issued to office, we use by office overhead control account amounted to 2,000, and when indirect material is issued to selling department, we credit by selling overhead control account amounted to 3,000. Now the material in the store is purchased is 50,000 and material transferred is 45,000. So our balancing value is by balance carried down amounted to 5,000. Our next ledger posting is related with wages control account, where we include all those transactions that are related with payment of wages and charging of wages to different departments. When we pay wages, we debit all the expenses. So on debit side we write wages paid amounted to 1,20,000, and in place of cash we use general ledger adjustment account 1,20,000. Now when we charge the wages to different departments, number second is direct wages, and direct wages is paid to those workers, they are directly involved in the production process, and the wages paid to them is 70,000. Now we charge this wages to production department, which is known as WIP ledger control account amounted to 70,000. Now the indirect factory wages is charged to factory overhead control account. So on credit side we write by factory overhead control account amounted to 30,000. Salary paid to selling staff is charged to selling department. So we write by selling overhead control account with the amount 5,000, and the last is salary paid to admin staff is charged to admin overhead control account. So by office and admin overhead control account with rupees 15,000. Now the total of debit and the credit side are same, that is 1,20,000 and 1,20,000. Now when we pay wages, we debit the wages control account, and when we charge wages, then we credit the wages control account and charge these wages to different departments where the workers are working or involved in some work. Our next transaction or ledger posting is related with overhead control account. For this, first we have to understand this flowchart. Once you remember this flowchart, then you can easily do the ledger posting related to overhead accounts. So when we are talking about the ledger posting in the cost books, first we open three accounts. First is stored ledger control account for all those transactions that are related with material. Number two is wages control account for the payment of wages and charging of wages. And number three is factory overhead control account for the expenses related to factory. Now these three accounts balances are transferred to production department or WIP ledger control account. Now the production department and the admin overhead control account balances are transferred to finished stock ledger control account, and the finished stock and our last overhead, which is selling overhead control account, the balances of these two accounts are transferred to cost of sales, and the difference between cost of sales and sales, first we transfer the balances of these two accounts to costing P&L to find out the profit in the cost books. So with the help of this flowchart, we understand how we charge our or transfer our balances to different departments. Now when we are talking about overheads, factory overhead is charged with production department or WIP ledger control account. Admin overhead or office overhead is charged to finished stock ledger control account, and the selling overhead is charged to cost of sales account. Now when we prepare overhead control accounts, this is our example. Here we prepare overhead control accounts, and our first case is factory overhead paid amounted to 30,000 and the factory overhead recovered amounted to 25,000. Now when we pay the overheads, our entry is overhead control account debit. In place of cash we use general ledger adjustment account. So in case of factory overhead paid, our entry in the factory overhead control account debit is to general ledger adjustment account 30,000. In case of office overhead, to general ledger adjustment account amounted to 20,000, and in case of selling overhead we write to general ledger adjustment account amounted to 10,000. These are the overheads that the company pay. Now when we charge or recover the overheads, here we recovered only 25,000 and we pay 30,000 of factory overheads. So the charging of factory overhead is through production department, which is WIP ledger control account. So in credit side we write WIP ledger control account and we recover only 25,000. So 5,000 is our loss, which is in case of undercharging or under recover of overheads, which is transferred to costing P&L. So on credit side we write by costing P&L account 5,000 rupees. In our next overhead, we paid 20,000 office overhead, but we recovered 22,000, which is over recovery of overheads, and this profit is also transferred to costing P&L. So first we write on the credit side by finished stock ledger control account 22,000, and the balance on the debit side is transferred to costing P&L. So to costing P&L account 2,000 rupees. Our last overhead is selling overhead, and the balance or the charging of this overhead is through cost of sales account. So by cost of sales amounted to 7,000, and this under recovery of overheads is transferred to costing P&L with the amount 3000. So this is how the control accounts, overhead control accounts are prepared, or we do the ledger posting of overhead control accounts. Now we take one example where all the transactions are mixed, and here we have to prepare cost ledger accounts of ABC Limited, and the opening balance on 1st April 2020 is given. Our first balance is in stored ledger control account 14,000 on the debit side. WIP control account is also the opening balance on the debit side, and finished stock ledger control account 4,000. Now first we write the balances on the debit side. In stored ledger control account our balance is 14,000. So to balance brought down 14,000 in stored ledger control account. In WIP ledger control account 25,600 to balance brought down 25,600, and in finished stock our balance is 4,000 to balance brought down 4,000 rupees. Our last opening balance is general ledger adjustment account, which has the credit balance 43,600. So on credit side we write by balance brought down 43,600. Now we take one by one our transactions for the year ended 31st March 2021. Our first transaction is material purchased amounted to 80,000. So our entry is stored ledger control account debit to GLA, because material is increased in the store, and in place of cash we use general ledger adjustment account. So in stored ledger control account we write to general ledger adjustment account for the purchase of material costing rupees 80,000, and in general ledger adjustment account we write by stored ledger control account 80,000 rupees. Our next transaction is wages paid or expenses paid amounted to 1,20,000. So in wages control account to general ledger adjustment account 1,20,000, and in general ledger adjustment account we write by wages control account 1,20,000. Our next expense is factory overhead incurred 69,200. So in factory overhead we write to general ledger adjustment account in case of payment of overhead, and the reverse entry in general ledger adjustment account by factory overhead control account 69,200. Next transaction is selling and distribution expenses paid amounted to 10,800. So in selling and distribution expenses to general ledger adjustment account 10,800, and in general ledger adjustment account by selling overhead control account amounted to 10,800. And our last payment of overhead, which is office overhead control account with rupees 7,000. So in office overhead control account we write to general ledger adjustment account, because we debit all the expenses that we pay with general ledger adjustment account, and in general ledger adjustment account we write by office overhead control account 7,000 rupees. So these are the transactions that are related with payment of expenses or overheads, and our entry is expenses or overhead control account debit to general ledger adjustment account. Our next transaction is transfer or recovery of overheads. Next, our sixth transaction is material issued to production. Now the material is transferred from the store to the production, which is known as WIP ledger control account, amounted to 74,400. So in stored ledger control account on credit side, because material is transferred to WIP ledger control account amounted to 74,400, and where the material is transferred, WIP ledger control account, so we debit the WIP ledger control account with stored ledger control account 74,400. Next transaction is office overhead recovered. Now the office overhead is recovered from finished stock, factory overhead is recovered with WIP, and the selling overhead is recovered with cost of sales. So one by one we do the ledger posting. So first we do the ledger posting of office overhead. So the office overhead is recovered by finished stock ledger control account with rupees 7,000, and in finished stock ledger control account we write to office overhead control account 7,000 rupees. Our next transaction is factory overhead recovered with WIP 68,880. Factory overhead control account is recovered with WIP. So we write in factory overhead by WIP ledger control account 68,880, and in WIP ledger control account to factory overhead control account 68,880. Our next transaction is selling overhead recovered with cost of sales amounted to 10,640. So in selling overhead, first we write by cost of sales 10,640, and in cost of sales we write to selling overhead control account 10,640. Now our last transaction is the sales done by the company for the year amounted to 3 lakh. So in case of sales, our entry is cash or debtors account debit to sales, because sales is an income. So in sales we write in place of cash or debtors. On credit side we write by general ledger adjustment account amounted to 3 lakh rupees, and in general ledger adjustment account we write to sales 3 lakh rupees. Now the closing balances are given as on 31st March 2021. The closing balance of WIP is 29,400 and finished stock is 9,400. So first we write the balance of WIP account by balance carried down, and our balance here is 29,000. In WIP ledger control account our balance is 29,400, and in finished stock our balance is 9,400. Now remember the flow chart. First we have to take three accounts for balances. First we take stored ledger control account, wages control account, and factory overhead control account. The balances of these accounts are transferred to production department or WIP ledger control account. So in case of stored ledger control account, we have already transferred the balance to WIP. So the remaining balance is entered with by balance carried down, and here the raw material unused is 19,600. In our second account, wages control account, the balance is transferred to WIP ledger control account 1,20,000, and in WIP ledger account we write to wages control account 1,20,000. And our last account is factory overhead control account, where balance has already transferred, but in case of factory overhead we pay 69,200 but we charge or recovered only 68,880. So it is under recovery of overheads. So the loss is transferred to costing P&L account amounted to 320. So in costing P&L account we write to factory overhead control account 320 rupees. Now our next account is WIP ledger control account. This is our fourth account, and office overhead control account is our fifth account. The balances of these two accounts are transferred to finished stock ledger control account. So we transferred the balance of WIP ledger control account by finished stock ledger control account, and the balance is 2,59,480, which is transferred to finished stock. So we write on the debit side to WIP ledger control account 259,480. Now our next account is, because office overhead is already balanced, our next two accounts are finished stock ledger control account and selling overhead control account, and the balances of these accounts are transferred to cost of sales. So first we balance the finished stock ledger control account, and our balancing value is by cost of sales amounted to 2,61,080, and in cost of sales we write to finished stock ledger control account 2,61,080 rupees. Now our next account is selling overhead control account. Here we pay 10,800 but we charge only 10,640. Now this is also a case of under recovery of overheads. So our balance is transferred to costing P&L account with the amount 160 rupees, and in costing P&L account we write to selling overhead control account 160 rupees. This is the amount 320 rupees. Now our next two accounts are cost of sales and sales. The balances of these two accounts are transferred to costing P&L to find out the profit in the cost books. So first we transfer the balance of cost of sales. So we write on the credit side by costing P&L account, and the amount is 2,71,720, and in costing P&L we write to cost of sales 271,720, and in sales account we balance with costing P&L. So on debit side we write to costing P&L account 3 lakh rupees, and in costing P&L by sales 3 lakh rupees. Now we balance the debit and the credit side. So to find out profit, and the profit is transferred to general ledger adjustment account. So our profit here is 27,800, which is transferred to GLA. Now we do the reverse entry in the GLA by costing P&L account with rupees 27,800. Now we balance our last account, which is general ledger adjustment account, and here our balancing value is 58,000. Here our balancing value is 58,400. Now we done all the ledger posting of different control accounts. Now we prepare the trial balance on the basis of balances remained in different accounts. So first we see the stored ledger control account, where our balance is 19,600, which is the debit balance. In WIP ledger control account our debit balance is 29,400, and in finished stock ledger control account our balance is 9,400. First we write the balances of all these three accounts. So in trial balance, first we write stored ledger control account. Here our balance is 19,600. Next account is WIP ledger control account. Our balance is 29,400, and our last account is finished stock ledger control account, and here our balance is 9,400, and the balance of general ledger adjustment account is 58,400, which is the credit balance. So on credit side we write general ledger adjustment account, and our balance is 58,400. Now we total the debit and the credit side. So both the sides are equal. So our question is correct. So in this video, first we understand the ledger posting of individual accounts that are related with material which is stored ledger control account, wages related expenses or wages or salary related transactions in the wages control account, and the overhead control accounts. Then we take one question to understand it clearly. So friends, if you like this video, please share this video and subscribe the channel. Thank you so much. Have a nice day.